And we'll move on to the second presentation. And the second presentation is going to be made by Head of Sustainable Investing in Standard Chartered Bank, Eugenia Koh. Please watch the video.
Hi everyone, this is Eugenia from Standard Chartered, and I head up the Sustainable Investing proposition for Standard Chartered Bank. I'm here to share with you today some of the investor trends we're seeing in sustainable investing and how you can get started as well as you're thinking about it from an investments perspective. So I'll share my slides now so you can see it. But essentially, I wanted to talk to you first about sustainability because that's really the backdrop of which we're operating in, and that's driving a lot of consumer interest and awareness in this space. So, from sustainable fashion through to sustainable buildings, through to all that we're seeing in the movement towards moving away from plastics, that's really gaining a lot of awareness and among our consumers, and that's feeding into some of the investor interest as well as demand. So if we think about some of the opportunities in the different sectors, let's take green buildings for an example. The green building segment is meant to grow by a CAGR rate of about 11.3% from 2019 to 2027 to reach about 573.9 billion by 2027. Green buildings play an important role in the energy transition, and that's one aspect that people are interested in and thinking about. The second, which might be closer to home for many of us, is really that of plant-based foods. So, the trend of veganism, with COVID, more and more people have also been thinking about healthier eating, and all of these fall within the sustainability space and has implications also for sustainable investing. So the plant-based food market is expected to grow at a CAGR of about 11.9% to reach about 74.2 billion. So, as we're thinking about sustainability and sustainable investing, it's no longer just about doing good, but it's also about profitable businesses. And that therefore brings me to sustainable investing. At Standard Chartered, we define sustainable investing as investing in solutions that not only gives financial returns, but also generates social and environmental benefits. It has the dual objective of profit and purpose. The two criteria are increasingly connected. For example, if a company does not consider its environmental impact, it could get into reputational issues or lose a segment of its customers who demand that their brands are behaving in a way that is not detrimental to the environment. There is an increasing body of customer research that shows that consumers are either extremely or very concerned about environmental issues. And that brings me to the next point really around sustainable investments and whether there is a compromise in performance. That is a question we get a lot from investors out in the market. And this has come about really because the early sustainable investment funds, let's say 10 years ago, 15 years ago, were focused mainly on exclusions. And this has impacted their performance. The industry has, however, evolved. And today, there is a greater variety of sustainable investing approaches, which is contributing towards better risk management and building more resilient portfolios. For instance, during last year's pandemic, there was a lot of research done on the performance of sustainable funds and how they have been impacted by COVID. One study found that in the 2020 first quarter drop, 94% of sustainable indexes actually outperformed. And secondly, there is also the understanding based on academic research that if you integrate ESG factors, you can build more resilient companies, which lowers risk. Companies capturing some of these trends in sustainability, like I talked about earlier, also stand to outperform. And so with more and more research exploring and almost demonstrating the link between ESG and financial performance, that's something that's really helping investors get behind this momentum. This is an interesting study also that I wanted to share with you. So this is one of the key studies to date, and it's actually a meta-analysis of over 2,000 studies conducted over 40 years on the relationship between ESG and performance. As some of you might be aware, there is often conflicting research on whether ESG actually impacts performance negatively. And what's useful about studies like this, which are meta-analysis, is that they help establish statistical significance across studies that might otherwise seem to have conflicting results. And this therefore increases the reliability of the information. This study found that in about 90% of the cases, there is no underperformance, which is important as it debunks one of the common misconceptions on having to compromise on returns. So when we think about ESG factors, the key question to ask as investors is how material is this to performance? Not all ESG factors are equal, and they differ across industries. For example, health and safety issues are much more material to industries like mining and airlines compared to, say, banking. When it comes to ESG, looking at ESG from a risk perspective is one we find the most compelling, regardless of whether investors are doubtful over whether ESG factors are solely attributed to outperformance. There is less of a debate that the incorporation of sustainability factors leads to improved risk management. And studies also suggest that ESG compliant firms face lower cost of capital and a lower risk premium due to greater transparency. And they also have a lower risk that their assets become stranded or worthless. Reputational risk is also growing. And I think as readers of the press, we see that quite a lot. And one study actually found that ESG controversies wiped off 500 billion of the value of US companies. Another important piece of research published last year was from data provider Morningstar, examining the long-term performance of a sample of sustainable funds. The study shows that the majority of strategies have done better than non-ESG funds over the 1, 3, and 5, and 10-year period. This analysis carries weight because until now, there has been limited data on sustainable funds' long-term performance. So if you're thinking, how can you start integrating some of these sustainable strategies into your investments? There are usually 4 approaches that investors look at, and they might be interlocking with each other. There is exclusionary screening, which I highlighted earlier, where clients can avoid companies that do not align with their values, such as tobacco, oil producers, co-producers, alcohol, gambling. And more, clients are combining this with other strategies. Another approach is ESG integration, where environmental, social, and governance factors are incorporated into financial analysis. Next, we have thematic investing, which focuses on one or more sustainability issues like climate change, clean water, or education. And lastly, there is impact investing. For impact investing, the primary focus is really on intended positive environmental and social outcomes. So I've spoken quite a lot about ESG, and I thought I'll bring it to life with some examples on what this means in terms of ESG factors being considered, especially the ones who have been in the spotlight due to the COVID-19 pandemic. Let's take biodiversity and land use as an example under environment. This has become an area of increasing interest during COVID-19, given that a number of zoonotic diseases, such as the COVID-19 virus, are being linked to climate change. Carbon emissions is another one that the investment community is looking closely at, given the cost to companies. The top companies globally estimate about $1 trillion worth in climate risk and double that in opportunities pertaining to climate. On the social side, health and safety has also been in the spotlight during the pandemic, and the impact of poor health and safety policies on the workforce and subsequently company resilience and productivity. So this is really a quick overview of really sustainable investing, the key factors, some of what you should be thinking about, and the issues pertaining to materiality. We also did a sustainable investing study across 4 key markets in Asia, surveying about 1,000 investors, and I thought that that might be interesting to share with you. What we found was that while interest levels are high among investors, actually apprehension levels are equally high. What are some of the barriers to entry? I've talked about the concerns about performance earlier. And in addition to that, there is also the lack of investor knowledge, the lack of clarity in reporting social outcomes, the difficulty in selling quickly. And these are some of the key ones that we hear quite a lot about. One of the areas that we have looked at as a bank in terms of addressing some of these concerns is really to do deep due diligence into the sustainable products on our shelf, because one of the investor concerns is that of, a lack of clarity and wondering whether some of what's offered out there is suffering from what we call greenwashing or over marketing in terms of what it delivers. So as a team, amidst the many strategies being developed, we've decided that we need to do deeper due diligence on the sustainable funds that are being pitched to us. As a sense of volumes, in addition to new funds launch, we also saw repurposed funds hit a new high last year. And Morningstar had identified 253 of such funds, about 87% of which reflected the change in the way they were being branded as sustainable because they had changed their branding. So amidst this, the concerns around ESG washing or greenwashing are real to many investors. This is also exacerbated by the lack of common standards, though the recently launched EU taxonomy will be helpful in furthering and strengthening the space. So with our in-house proprietary methodology, we launched what we call ESG Select to really curate some of the sustainable solutions on our platform. There are two parts to this when we look at funds. Firstly, we screen for companies that have negative environmental and social impact. For example, tobacco, oil and gas. Next, we look at the 5 key factors which we think are important when thinking about selecting a sustainable fund. This ranges from corporate profile of the asset manager, whether they are walking the talk themselves, whether there is sufficient ESG expertise in the firm, what is the ESG strategy of the fund, the breadth and depth of ESG integration, and also impact reporting. So we've shared some of the ESG factors earlier, and really looking at how well material, environmental, and social factors are being embedded and considered when they're selecting these companies. That's something that is important to us, and this could be a deeper probe into the supply chains of companies that are being invested in, or the governance factors such as diversity of leadership and boards. And this seeks to then provide investors with the assurance that what they have on the shelf is not being greenwashed. The other area of the research that I thought might be interesting is to share with you what Asian investors thought and global investors thought were important to them in terms of some of the sustainable themes. You can see that clean water and sanitation, good health and well-being, as well as climate action were among some of the key themes for investors. And we see that's quite consistent over the years, including during the period of COVID last year, where this survey was running. So we found actually 5 key types of investor profiles as a result of this research: the optimizers, the impact believers, the cautious, the resistant, and the apathetic. So I wouldn't go through all of them, but I thought I'll call out some of the key ones for you. So optimizers, they might reflect some of you out there in the audience if you're watching it. You might have a high level of interest in sustainable investing, but also a very high apprehension. You want to do good with your investments, but are also focused on financial returns. And so understanding how sustainable investing can contribute towards better risk management, as I highlighted earlier, and portfolio outperformance is a good place for you to start, alongside understanding the role of your capital in driving sustainable development. What we find in working with clients and investors is that it's useful for them to learn about the materiality of these ESG factors relating to one's specific investments. The second group is a group that we call impact believers. These are, investors that have high levels of interest and also low apprehension. So most likely they have already heard of or have previously invested in sustainable investments. What's interesting about this group is that you would hold strong views on sustainable investing, and you want to ensure that when you are investing that you also understand what some of the impact outcomes are. So impact measurement is an area that would be important for you to look at, especially understanding the quality of reporting that you're getting, and knowing how your investments is actually driving tangible impact. The third segment, which is the cautious investors, they're actually pretty similar to the optimizers, except that they have lesser levels of interest, so perhaps moderate interest, and still high levels of apprehension. So for them, understanding how sustainable investing can contribute to risk management and performance is also a good place to start. Learning about materiality of some of these factors, and maybe monitoring simple solutions such as sustainable ETFs or funds, so that you get acquainted with the space with a bit more of a low-hanging fruit kind of way. So these are the three types that I thought I'll bring you guys through. And finally, to end on this final slide, I guess, with all that we're seeking to do in sustainable development, it's really to harness capital to supporting development and to contributing towards the sustainable development goals. So I thought, ending with a slide on the sustainable development goals was a good one to land on, and really to think through how we can be all contributing towards plugging the $2.5 trillion investment gap, especially in developing countries, and the role that our investments can play. So I will conclude here, and thanks for listening in, and we'll now go into Q&A.
네, 고맙습니다. 지속 가능한 투자와 미래라는 주제.
Thank you very much, Eugenia Koh, for your wonderful presentation. And we have two questions for Ms. Koh, and I will read the first question. What is your current plan of Standard Chartered regarding the promotion of green investment? Could you answer the question?
Great, thanks for the question. There are a couple of areas that we'll focus on when it comes to promoting green investments and really to accelerate sustainable finance by supporting the net zero transition. So the first is really around developing frameworks. Our green and sustainable product and bond frameworks are developed in collaboration with a third party called Sustainalytics and reviewed annually. This sets out and qualifies what is deemed as sustainable and green. And this is important, especially because we want to ensure that we mitigate any risk of greenwashing. The second is around product innovation. We have launched a number of sustainable solutions, which we feel are innovative and, really encourages investors to get involved in it. The first is a simple product like the sustainable deposits, which essentially references the sustainable assets and allows investors, including retail investors, to be contributing towards sustainable development. The products, the assets, I guess, within this sustainable deposits that are being kind of financed, help support the flow of capital towards climate-related activities, including renewable energy, energy efficiency, and climate change adaptation. The second, which we feel has been really quite innovative, is a recent transaction sukuk that we did with Etihad Airlines. So Etihad intends to use the funds for a more energy-efficient aircraft and research and development into sustainable aviation fuel. The sukuk also includes a commitment from the airline to purchase carbon offsets should it fail to meet its short-term target to reduce the carbon intensity of its fleet. The next area that we have really done quite a bit of work on is around building thought leadership, and really having a range of client insight materials to be able to help our clients be engaged on the topics. These topics include facilitating the adoption of solar power, the role of blended finance in funding energy transitions, and the role of hydrogen. One of the areas that we feel particularly passionate about is really about driving sustainable finance and having an impact where it matters most across emerging markets. And we're seeing this take place even with the financing that we're providing. 91% of our sustainable finance assets are located in emerging markets and 86% in some of the world's most developed nations. Our network means that we're providing finance where it matters most, really catalyzing change where it's greatest and most needed. For example, financing a solar project in India will help avoid more than 7 times the CO2 from a similar sized project in France, given the current sources of power on those countries' grids. The report, one of the reports that we publish is our impact report, and that shows that from 2019, July to July 2020, our green projects have helped us to avoid 738,000 plus tons of CO2 emissions, the equivalent of 217,000 people's annual emissions in low and middle income countries.
네, 고맙습니다. 이어서 다음 질문 드리겠습니다.
Thank you. Next
오늘
question.
이 시간 함께하고 계시는 참석자와 또 시청자
We have participants and also we have audience. What green investment in leadership strategy can you recommend to this audience joining us today?
Yeah, sure. So it's important that we collectively address the barriers to capital flows, even as we think about accelerating green investments. One of the thought leadership reports that we published, which is developed in dialogue with a panel of 300 of the world's largest investment management firms, with total assets under management of over 50 trillion, details what some of these barriers are. For instance, there's a bias towards deploying capital in developed markets, despite investors' acknowledgement of outperformance in emerging markets. We also see that people are concerned around political risk and the role of governments, and how it's important to find good quality data. So data plays a critical role, the standardization of measurement. So these are some areas that we will continue to work on this year and the years to come, really playing our role in removing obstacles to climate action across our markets. And that's one area which we think many in the industry can also contribute towards. We also released another report called Opportunity 2030, which showcases the critical role of the private sector in meeting the UN Sustainable Development Goals over the next decade, and the opportunity to do so in 15 of the fastest growing economies. So the report included a focus on affordable and clean energy, showing that investment potential of more than 700 billion in India, for example, nearly 150 billion in Indonesia, and more than 70 billion in Bangladesh. We believe that to unlock some of these opportunities, it's not just the finance industry, but forming partnerships with parties, including institutional investors, sovereigns, academia, and civil society will help further the momentum. I mentioned our work on product innovation earlier, and this is important to further grow the green investment space. As a bank, we have a dedicated sustainable finance team that drives the growth of sustainable finance product portfolios to support sustainable development, with products underpinned by a robust approach to governance. So to assist in capturing and promoting these opportunities, we also have a sustainable finance steering group. This steering group is a monthly forum that is chaired by our global head of sustainable finance and made up of senior representatives from various businesses who discuss then sustainable funding opportunities, including climate-related financing across our footprint. So, really a mix of partnerships, both internally, externally, looking at product innovation, continuing to further the momentum on data and standardization of measurement. Those will be important strategies going forward to unlock the momentum in green investments.
네, 고맙습니다.
Thank you very much, Ms. Eugenia Koh, for your presentation and the answers for the questions. Now we have concluded all the sessions that we have prepared for the 10th Seoul Asian Financial Forum. So we have talked about the future of green financing and the changes that will take place in corporate world. Seoul Asian Financial Forum next year will visit you with more appropriate and time-relevant topics. We would like to ask for your continued interest and support for Asia Business Daily, and I would like to thank you all for joining us till the very end of this forum. Thank you very much and goodbye.